United States. Hasn't NAFTA basically caused a lot of that to go away, at least for a while, when they can hire labor and ship all their companies off to have China produce goods and Mexico produce goods and other foreign countries? Haven't they kind of pulled that worker compensation piece out of this, so it's almost artificial again? It's supported by these 10 cent an hour sweatshop kind of places that make a majority of our goods now in the United States. And then the second question is, why is this hitting now with oil demand versus supply? Is it true that our supply has really gone down? It seems like at 85 million oil barrels of oil a day, we're kind of similar to where we've been for a fairly long time. So why all of a sudden is oil jumping from $30 a barrel to $140 a barrel, and along that, which may or may not be related to the gas prices, are going up at the pump, which also you look at the bottom line of the gas prices, and that's going into pure profit for all the oil companies. So how do all those kind of things work together?
Let's see if my memory is good enough to handle two questions at once. The first one, you're right, certainly, about the manufacturing workers just have no bargaining power at all. We still have, about 14 million manufacturing workers in the U.S. It's not gone to zero, but it sometimes seems that way. But they have no bargaining power at all. It's reached the point now where the average hourly wage in services is now equal to or maybe even slightly higher than the average wage in manufacturing. So this image of manufacturing is the place of the high-wage jobs for regular folks is just not true anymore. It's all about the service sector.
Could you say that again, Doug, for our listeners?
Yeah, the average service sector hourly wage is either equal to or surpassed. It varies a little bit from month to month, the manufacturing wage. So it's no longer, manufacturing is no longer the place for high-wage jobs for regular people.
Very important.
So service jobs, just again for our listening audience, service jobs are like restaurant workers.
Well, there's also
cashiers,
lawyers and architects and things like that. So it's there are very high-quality service jobs, but the retail sector is now one of the major employers in this country. Bars and restaurants. Over the last couple of years, the strongest strongest job-generating sectors in this rather weak job market have been healthcare, which is a byproduct of the healthcare inflation we all know about, and bars and restaurants. And those are the two leading sectors in job production over the last couple of years. It really doesn't seem like a good foundation on which to build a dynamic, healthy economy over the long term, as much as I like bars and restaurants. On the oil issue, I would say we have seen tremendously rapid growth from China. Now, the other side of that is now China has now surpassed the United States in greenhouse gas emissions because they're just consuming so many fossil fuels, coal and oil. Part of that is to manufacture stuff that we import and stocks the shelves of Walmart, but they're also generating a lot of internal growth in China as well. And to a lesser extent, India. Some of the Middle Eastern countries are consuming more of their own oil rather than exporting it. So we've seen rises in demand that just have not been met by rises in supply. And add to that, we've had problems in a couple of major oil-producing countries. Venezuela is not producing as much as it did 5 years ago or so. They never fully recovered from that strike against the national oil company, which was prompted by anti-Chavez feelings among the technical staff and managers of the Venezuelan National Oil Company. Nigeria, a lot of disruptions to supply because of militants in just blowing up oil platforms and shooting oil workers. And it's not clear what they're all about. I hear differing reports about whether it's an actual political movement or just a bunch of thugs trying to shake down the oil companies.
And now Libya.
I missed the news on Libya. What's going on there?
They're cutting production. Suddenly, after a couple of years of hearing nothing from Libya, earlier this week, they announced that they're going to take a more active role in OPEC and resist the American call for increased production. They want to resist that and keep production where it is, or even cut it. So Gaddafi is back in the mix.
Yeah, and then, of course, Iraq producing 1 million barrels a day less than it did before the war, and they just can't get that back up. And the Saudis are talking about increasing production. But that's the whole Saudi issue is very murky. We just don't really know. The Saudis aren't telling how much oil they have in the ground and how much they can produce. I mean, this stuff is all very secretive, and a lot of people speculate that maybe the Saudis have peaked and they just don't have the juice anymore. Who knows? But it's just supply is pretty flat as demand continues to rise.
So along the lines of, sorry, John.
Doug, I want to come back to that in a second. This issue of oil and oil shock, and you stressed all the fundamentals, be it labor unrest or militancy in Nigeria or Libya wanting to cut production, etc. I've got my own little theories as a former trader about how the deregulation of the commodities market, particularly during the Wendy Graham era when she was chair of the Commodities and Futures Trading Commission. Do you care to comment on that? Because I think speculation is driving up the price.
Well, I think that's generally genuinely exaggerating the price move. There's no question about that. I mean, if you just look at the stock market. We have a long history on this kind of data. There's a famous paper that Robert Shiller, Yale economist, now famous for his house price index, did in the early 80s, comparing the movements in dividends or underlying corporate profits to the movements in stock prices. And the message was that stock movements, although they paralleled the moves in underlying profitability and dividend payments, they greatly exaggerated them, both going up and going down. So the stock prices, the financial markets are always far more volatile than the underlying fundamentals would warrant. And I think that's happened in the oil business. I came up with this long list of fundamental reasons why oil prices are high, but then I think what we've also seen is that all the hedge funds and everyone else in the money management business has just